Investing is a long-term relationship. We're getting married for the foreseeable future. So there is a two-way relationship around you're choosing us just as equally as we're choosing you. We need to like each other. We need to believe in the common vision, the common purpose. We need to want to work together, sometimes in good times, sometimes in bad times, over the next 5 to 10 years. We need to be willing to roll up our sleeves. Most importantly, we need honesty. When you start from a basis of honesty and genuine goodwill, you have a long way to run together.
As investors, we talk a lot about product market fit as a thing, but I think investor-founder fit is an equally important concept. It depends really for the founder what they're looking from the investor relationship. It's more than money, clearly. So the question is it about helping acquire talent? Is it about helping build a sales force? Is it about cracking open some key accounts? I think the founder should really think like what they want for an investor, and then selecting a subset of investors to talk to based on those areas of expertise. And also, sometimes it helps put together a syndicate of investors when companies raise multiple rounds. You don't want people who have the same exact expertise. You want to mix and match different areas of knowledge. You might want to add angels to the mix, even in later rounds. So I think founders should be very thoughtful about how they build out the cap table, so it adds value to the business at various stages, besides just the capital.
Most founders at a Series A are not thinking about a Series B and a Series C. I would posit that they should be thinking about their later stages of investing, because every milestone that they have, whether it's raising a Series A, then a B, then a C, whether it's raising debt, whether it's doing a strategic partnership, requires being surrounded by a board that can support them. And that is where Insight is along for the journey. All the way from the initial diligence, all the way to final exit and delivery, Insight has the expertise along every step of the journey. And I do think that it's important for a founder to evaluate what else is a company going to bring to the table, what else is my investor going to be providing other than just capital.
When founders evaluate investors to take on a journey at early stages, I think it comes down to the capability fit. Can the investor do things that you want them to do, whether it's building out the team, bringing prospects, bringing other types of partnership opportunities, etc. I think the founder should also evaluate two parts of the relationship. They should evaluate the people you actually work with day to day, like the so-called deal team. Do you like working with these people? Do you see yourself working with these people for the next 7 years? But they should also evaluate the institution separately, because people and institution are kind of somewhat the same, but also different. So it's important to look at the institutional capabilities of the firm. What can they provide besides what the people at the forefront can do? And then most importantly, I think the founders should really make sure there's alignment with the investors in what they're trying to achieve. What does success look like?
At the end of the day, the founder or the CEO's major job is to ensure that they sustain or bring about optionality for their business. You want to make sure that at any stage of growth, you have the options that you need, whether that's to raise more capital, whether that's to exit, whether that's to do a strategic partnership. You want to sustain optionality, and only an investor with a wingspan large enough to have those kind of industry relationships and that kind of expertise is really able to help you think through how to sustain that optionality.